On April 2, 2025, President Trump sent shockwaves through the global economy. He announced a sweeping set of new tariffs. These tariffs target a wide range of goods from U.S. trading partners. This represents a sharp departure from decades of U.S. trade policy. The new tariffs are substantial. A baseline tariff of 10% will be applied to all imports. Additional reciprocal tariffs will target specific countries, reaching as high as 54% for China. This brings the overall U.S. tariff rate to its highest level in over a century. The last time tariffs were this high was in 1910. The decision has sent a chill through global markets. Many fear a trade war. Economists warn of serious consequences. The tariffs could disrupt global supply chains and lead to higher prices for consumers. The move has been met with widespread condemnation from business leaders and trade experts. The Trump administration hopes they will protect American jobs and force trading partners to make concessions. However, many experts believe the tariffs will harm the U.S. economy and damage relationships with key allies. The tariffs are a gamble. The reaction in global markets was swift and brutal. Stock markets around the world plunged. The Dow Jones Industrial Average plummeted over 1,200 points in futures trading. The S&P 500 dropped by 4%, wiping out nearly $2 trillion in value. The tech-heavy Nasdaq Composite suffered even heavier losses, falling by 5%. Asian and European markets also tumbled. Japan's Nikkei 225 index fell by 2.8%. The Stoxx Europe 600 dropped by 2%. Investors fear the tariffs will trigger a global trade war. The market reaction is a clear vote of no confidence in the Trump administration's trade policies. The impact of the new tariffs is already being felt across a wide range of industries. The technology sector, heavily reliant on global supply chains and international sales, has been hit particularly hard. Apple, Amazon, and Nvidia all saw their share prices plummet by more than 5%. These companies face higher costs for components and reduced demand in key overseas markets. Consumer brands are also feeling the heat. Nike, which sources a significant portion of its footwear from Vietnam, saw its stock price plunge by 12%. Other retailers, including Lululemon and Deckers Outdoor, are facing similar challenges. The banking sector has also been swept up in the market turmoil. The SPDR S&P Bank ETF, which tracks major U.S. banks, plummeted by 8%. Investors are concerned that the tariffs could slow economic growth and lead to a rise in loan defaults. Ironically, even the U.S. steel industry, which the tariffs are designed to protect, has been negatively impacted. U.S. Steel, Steel Dynamics, and Nucor all saw their share prices decline. The economic fallout from the tariffs is not limited to the stock market. Key economic indicators are also flashing warning signs. Inflation, already at a multi-decade high, is expected to accelerate further as the tariffs push up the cost of imported goods. Some economists predict that inflation could surge to near 5% if the tariffs remain in place. The US dollar, often seen as a safe haven asset during times of global uncertainty, has weakened considerably. The dollar index fell to its lowest level in months. The yield on the 10-year US Treasury note, a key benchmark for borrowing costs, has also fallen sharply. This reflects increased demand for safe haven assets as investors flee riskier investments. The Federal Reserve, tasked with maintaining price stability and full employment, is now facing a difficult dilemma. The tariffs have thrown a wrench into the Fed's plans, potentially forcing it to reconsider its rate hike trajectory. The long-term implications of President Trump's tariffs for the U.S. economy remain highly uncertain. Some economists argue that the tariffs could lead to a resurgence in U.S. manufacturing. They also believe that they could force trading partners to offer concessions on trade. However, many more experts are far more pessimistic. They fear that the tariffs will backfire, leading to higher prices for consumers, job losses in export-dependent industries, and slower economic growth. They also worry that the tariffs could spark a global trade war, which would further damage the U.S. economy and undermine global cooperation. The tariffs have injected a significant degree of uncertainty into the global economic outlook. Businesses are now hesitant to invest. Consumers are pulling back on spending. The global economy is entering uncharted territory, and the consequences of President Trump's protectionist policies are likely to be felt for years to come.